Hello, I hope you're doing well. So this is question 2 of last year's June exam. I've decided to go back to it because I noticed that a lot of learners are still struggling with income statements. So I'm just going to continue doing a bit of videos focusing on the income statement. Sorry, I have flu, so please bear with me if I start coughing. Okay, yeah, it just happened. Anyway, let's continue. Okay, so here they're telling us that FIFA Supplies is a partnership that sells sports equipment and offers soccer coaching. The owners of this business, Mayma Jr. and Kevin De Bruyne, have a financial year end of 30 September each year. Okay, so if I was a learner and I'm writing my exam and I'm sitting in front of my, like I'm just sitting there and I'm writing my exam, first thing first, I will highlight is that the name of the company obviously is FIFA Supplies. What are they selling? They're selling sports equipment and they're also offering coaching services, which means that they have two sources of income. Source of income from sales of goods and services and source of income from coaching. Okay, that's clear. Another thing that I'll highlight is the year end. So the year ends every year on the 30th of September, which means that if it ends on the 30th of September, then it begins on the 1st of October. So from the 1st of October the previous year until the 30th of September in the current year. Okay, I'm not going to go through the theory part. You have to do the extra studying for the theory. So I'm going to skip all of that and go straight to 2.3. So 2.3, they're saying you are provided with a pre-adjustment trial balance of FIFA Supplies. Refer to the information given below to complete the income statement of FIFA Supplies for the year ended 30 September 2021. And then they say show your calculations in brackets on the income statement to show your calculations to receive part marks. Okay, and then they're telling us that what is it? So basically, I just decided to just write down the year period, like how we were talking earlier. That if it ends on the 30th of September, then it means what? It would have began the previous year. So here it's the 1st of October 2020 all the way to 30 September 2021. Okay, then they've given us a pre-adjustment trial balance. Okay, I don't know why my Grammarly keeps highlighting this, but anyway, let's continue. Okay, so this is the information that we've given, and we've also given additional information from number 1 all the way to number 9. Okay, so obviously if you're doing an income statement, the first thing that you have to start with is usually the sales. So I'm just going to copy the sales and go straight to my answer book. So my answer book here, I'm going to always assume that the sales needs some work to be done on there. Usually the things that you have to take into account when you are doing your sales is usually debtors allowances. So let's check if we have any debtors allowances. Okay, another thing that I would do, obviously, if I'm writing my exam and here this is me sitting and I'm about to write my exam, obviously I'll do what? I'll have my pen or pencil. I know that whatever that I've dealt with, I just scratch it out from the question paper so that I know that I won't be duplicating things or getting confused. What have I done and what have I not done? Okay, so then what? The sales of 1,290,450 minus 1,000. Wow, Zuma problem. 18,200. Okay, let's check on the additional information if there's anything that I have to take into account. Otherwise, then it means that my work will be so much easier. Okay, I just want to increase this font. It looks very small. Okay, I think it's better now. Okay, so I'm scrolling down and I'm looking for additional information, and then bang, I find it. Number 1. So number 1, that's okay. I'm gonna highlight it for easy. Okay. So here they're saying goods which were due to be obsolete on 30 October 2020 were sold for cash 18,900, which is 10% below the cost. This transaction was not recorded. So the key thing here, obviously, is the fact that, yeah, they did sell, but it was not recorded, which means that now we're taking the legal liberties to do what? To record it. Okay, so there are two things here, obviously, that are impacted. Whenever there's a sale, there's always a cost of sale. Remember, very, very important. Whenever there's a sale, there is a cost of sale also. So here they're telling us that if they sold the 18,900, and then they're telling us that that 18,900 is below what? It's below their cost. So it means what? How much is the cost, basically? So we need to figure out the 100% value. We technically sold this for how much? Okay, let me do this. This 18,900 is actually 90% of the original cost. The cost should have been 100%, which means that now to get the cost of sales here, you would just say 18,900, then multiply it by what you are looking for. Remember, whatever you're looking for will always be at the top when you're doing this fraction. So you say multiply by the 100% value that you're looking for. That is our what? This is our x that we had to solve. We don't know the actual value for that. So say times 100 divided by what? We divide by what we have. What we have the 90% value of the, of the cost. So this gives us 21,000. So the 21,000 is the cost. So we sold it. It cost us 21,000, but we only sold it for 18,900 because they're saying it was about to be obsolete, which is also we sold it less than 10% its original cost. So let's record this. So then I have to add it because this is a sale. So it has to increase our sales. Okay, which means that 21,000 I was working out, I'll have to add it as part of my cost of sales. So let me check how much are the cost of sales there in at the top. Okay, let me see if I can copy this. Okay, copy. And then in the meantime, I'm just going to do this, highlight this, know that it's out of the way. Okay, so, and then here what I'm doing is that show workings. So open brackets, put in the values, and then you pause the video on your side and you calculate and figure out how much that is. In the meantime, I am getting for sales, cost of sales, I'm getting, like it when I do a video and someone is watching the video and they're not just watching but they're also doing the work, because then it means that you are also learning and not just watching. So it means that if you have a question, then you are in like liberties to just like ask the questions in the comment section. Otherwise, here. Okay, so then to get a gross profit, usually you always say sales less cost of sales. Okay, so that minus that, I get, you pause the video and you do it on your side. For me, I get 237,050. Yeah, that's what I'm getting. So now we are on to our other operating incomes. Which other operating incomes do we have? Okay, remember we did say that they're selling sports equipment and they're also offering coaching, which means that we have a fee income. So I'll put in fee income. Okay, already it seems like we have to work out something here. Okay, so I'm just going to put fee income 1,584,000. Okay, and then look for additional information if we have to adjust it. go down and look for additional information. Found it. Okay, sorry, I've already done the workings, but let's look at it in any way. Okay, so here it says what? Coaching fees for 12 players. So I have 12 players and they're charging them 660 each. So this is basically just say 12 times 660. And the key thing here, they're telling us that coaching fees for 12 players have not been recorded. Not recorded is the key. It means that we have to record it. Okay, I'm going to put a bracket here, and then so 12 times 660, you get 7,920. So video and you work it out on your side. My side, I get 1,591,000. 591,920. Okay, and then provision for bad debts. Okay, before I get into that, the other one that follows, let's check. Okay, rent income. So rent income, there might be something, always something with rent income. Okay, just gonna copy this. Okay, anyway, 121,000. Rent income. Okay, so for rent income, I already did it this side, but I'm just going to copy and paste it on the other side and then try and explain it, because the aim is to make sure that the session is as short as possible. Okay, so let's continue. So rent income number 4. Okay, so here they're telling us that rent was received until 30 November 2021. Monthly rent was increased by 950 per month on the 1st of July 2021. Okay, this is very straightforward, but it can be tricky if you struggle understanding what happens before increase, after increase, and all of that. So what do we have here? We have the accounting period. The accounting period begins on the 1st of October 2020 and it ends on the 30th of September 2021. Okay, it seems here, based on this information, that we have received rent beyond September 30th. We received rent for October as well as November. You got it. So it means that we got 2 additional months for rent income. So now we need to figure out how much are those months and then take it out because it has nothing to do with the current financial year that we're dealing with. Okay, I'm going to paste this. Okay, and then explain it. Okay, so what you have to know when it comes to rent, I usually have this method. This method, you'll never go wrong. It can help you out to calculate even your interest on, interest on capital before increase of capital, after increase on capital. So if you just use this method, you'll never go wrong. Obviously, a lot of learners struggle with timelines and all of that. So if you struggle with timelines and understanding timelines, I highly advise you to use this method. And yeah, things will be so much better. Okay, so one thing you have to know, obviously, I always start my calculation by just draw up my before increase period versus my after increase period. So here, as you can see, my before increase, I know that this timeline before increase is from the beginning of the accounting period. So the accounting period begins on the 1st of October 2020 until the date that they decided to change the rent, the date that they increased the rent. So when did they increase the rent? They say monthly rent was increased by 950 per month on the 1st of July 2021. So 1st of July obviously is at the beginning of the month, which means that from the 1st of July, the rent was no longer sitting at whatever amount that it was. So this means that the rent all the way to the 30th of June was a certain amount. And then after that, there was suddenly an increase. So the before increase period is from the 1st of October 2020 all the way to the 30th of June 2021. And then we have an after increase period. So the after increase period that we have is from the 1st of July, obviously, until when? Until the 30th of November. So it's not until the date of the end of the accounting period in this case. Because of what? Because they say that we receive rent all the way to the 30th of November. So I've counted the extra 2 months, which means that if I say 1st of July 2021 all the way to 30th of November 2021, then that gives me 5 months in total whereby the increase was in effect. So this means that now I'm in a position to be able to work out what I have to work out. Okay, so next thing then I would do what? I'll be like, okay, so this 5 months after increase, all I can just take that, I can just say that by the 5 months, and I'll be able to figure out that so I'm getting 4,750. So this is what? This is the total extra rent we are now receiving as a result of what? As a result of the increase. As you can see here, for 5 months. So I figured out the whole increase. So the next step now, what I'm going to do is to what? Take the full rent. So the full rent minus the increase. I'm minusing it out because I want to figure out, so how much was the rent originally before there was any all this confusion of increases and all of that. So I minus the 4,750, and now I'm sitting with 116,900. Okay, which means that my next step now is that I know that this one is for a period of 12 months plus 2 extra months, which gives me like 14 months. So then I'll say 116,900 divided by 14 months. Then it gives me 8,350. This 8,350 is the rent before increase. So this is what we were paying. They were paying us before we added that 950 extra, which means that now, for me in this question, to figure out then how much is the rent for October and November, the months that we receive income in advance for, then I'll just say what? This before increase, add the 950, then times it by 2. The 2 is for October and November, which gives me 18,600. 18,600 is what I'm going to minus here. This is my income received in advance. The liability, remember, income received in advance is a liability until the date that is due for is has passed. I'm getting 103,050. Okay, so the other one that we need to take into account now, let's just look at the information. So number 2, saying here provision for bad debts will decrease by 150. So if they're telling us here, they're telling us exactly what to do. It will decrease. So decrease is a good thing. It means that the people owing us, the most likely like the people that are owing us and us looking at them have like potentially ending up being bad. It seems like it's going down. Our projections have gone down. So provisions going down is a good thing for us because it means that income. So I'll say provision for bad debt or doubtful debt. It's the same thing. Adjustment. So just put that amount as it is. And then you pause the video and you add all these three things and figure out how much you're getting for operating income for the year. Okay. In the meantime, for me, I got, let me see, if I add all these three, I get 1,695,000. Okay, so now it means what we can now actually, I always, sorry, before I even finish, I always advise learners that before you close off your other operating income, is to always calculate your trading stock. Deficit or surplus, very important to calculate it before you even do anything else, so that you are able to figure out whether it goes on the other operating income side of things or it goes on your operating expenses. Because if it's a surplus, then it's an income. If it's a deficit, then it's an expense. You get, so let's calculate it. I'm just going to calculate it here. Obviously, your exam, you will calculate it separately and figure out where it goes. Okay, I'm saying a deficit because I've already worked it out. But in any case, let's look at it. Okay, so here they're telling us stock count on 30 September 2020 revealed the following on hand: trading stock. Then they're telling us that the trading stock that we did a physical stock count on is sitting at 389,230. So this is straightforward, guys. No complication, no confusion. All you need to know is that we went to the shop and we counted item by item, thing by thing. We touched it, we smelled it, we felt it. And with all that we've done, we were also able to figure out that actually, so what we have in terms of tangible that is stuck in our shelf is 389,230. This is the most reliable figure in terms of our trading stock. It's more reliable than the one that is in our books. This one here. And yes, we have it in our books, but it's not as reliable as something that we can see, touch, smell, and feel. I don't know if it makes sense. So that is why we have to adjust what the trading stock value every year at the end of the accounting period. So our books are telling us that we have 410,150. But our physical stock, we counted, we found out that is 389,230. Also not forgetting the fact that as much as we counted, there was also inventory that was about to be obsolete that we sold but didn't record, which means that this 21,000 cost is also impacting what? The value of the stock that is in our books. So we have to adjust this amount minus, basically take out the 21,000 first and figure out how much it is. And then after that, then we can do the comparison between books versus physical. Okay, let's do that. So then I'll just do what I'll say 410,000. Let me check. Okay, 410,150. So I'm adjusting the books first. Minus what we sold. Once it's sold, it's out of the books. It's out. It's no longer as part of inventory. Okay. And then after doing that, then I'll say minus. Obviously, you can just do the minus in here and get whatever you're getting. And then once you have what you're having, then you can compare. Your comparison is to what is to take what's in our books minus what we counted. Okay, so then I'll say minus. This is what we counted physically in the store, in the shelves. Which means that the amount that we're getting here, obviously, it is a what? It is an expense. It's a deficit that we got in terms of our stock. Okay, so I repeat, you do this first before you even close off your other operating income to figure out, just like how you have to do the same even for provision for bad debts. Okay, I'm continuing. Next thing, let's see. So we've taken care of these ones, so I can go straight to salaries and wages. Okay, salaries and wages, 367,500. Okay, salaries and wages. And then assumption is that you have to work out salary. Wow, 367,200. Okay, let's look at the information given to us. Okay, forgot that I need to. Okay, consumable stores, we haven't done consumable stores yet, but we're going to come back for consumable stores. Salaries and wages. So the saying here, one employee was sent, was left out for the salary. So this basically, in a nutshell, is that we have an employee that we paid for their salary, but we forgot to include them in the recording of transactions. So now we have to do what? We have to record the transaction for this employee. Okay, so how are we doing it? So simple, obviously. Okay, I've done it, but then I'm just gonna copy and paste and then explain it because I wanna see why this will be 2 hours. Okay, so this is, yeah, we have information here. The information here that we've given two separate information. One that has to do with the salary of the employee. The second one is it has to do with how much is the employer contributing towards that certain thing. Okay, so if you look at the first portion here, it says employer contribution, which is pension, UIF, and medical aid. And then on the second part of it, it's deductions, which is pension, UIF, pay year, medical aid, and then salary. So if I am to record in my income statement relating to, I have to record the gross salary of the employee, not the net salary. The gross salary of those employees. That the net is the after they've taken care of all the deductions. So to get my gross salary of this employee, I have to do what? I have to add back everything that has been minus. Remember, employer contribution is coming out of the pocket of the employer, not from the pocket of the employee, the salary per se. So hence I said 8,400 plus 670 plus 120 plus 880 plus 430. And then I get 10,500. Okay, so then it means what? It means that what I'm adding here, it's the gross salary of the employee. And then you add these two together, you should be able to get, let me see on my calculations, you do the calculations on your side too. I get 378,000, which means that now we can do the employer contribution. So employer contribution on that side there, all you're doing is that adding all those three that are related to the employer here as the 1,090. And then we go back up there to find out if there's any other additional information here. Employer contribution is 33,210. So 33,210 plus 1,090. Here you should be able to get, let me see, 34,300. Okay. Well, okay, let's continue. Okay, so we're done with that, and then now I can do my consumable stores. Consumable stores, it's very straightforward. All I'm doing here is just let me see, consumable stores 72,790. Okay, 72 790, and then just minus what we calculated. Remember, this is what's in the books, what's like was supposed to have been spent. We're supposed to spend the whole 72,790, but somehow at the end of the year, there's still some that was not spent, which is this one here. As you can see, we didn't spend this one, so it's left over. So now we need to figure out exactly how much was spent. So then we say 9950. Sorry. Okay. So I don't know what happened, but this is supposed to be here, consumable stores. Okay. And then you put it there, and then the next thing, obviously minus the 2, and I get 62,840. Okay, so we're done with consumable stores, and then the next thing is okay, we've tackled this. Oh wow, we're almost done. So we're only left with advertising. So I'm just going to highlight advertising as well. So advertising is 12,120. So it seems like sundry expenses is already done for us, so there's nothing for us to do with the sundry expenses. Let's look at advertising if there's any other shady information. Okay, so they're saying advertising amounts includes 1 month advance for October. The monthly premium is 3,120. So what are they saying here? They're telling us that, remember, our accounting year ends on the 30th of September, but somehow there was some money that was paid for October. This means what? This is a prepayment. We paid extra. So this is a prepaid. So we'll say minus. We have to minus prepaid. It has nothing to do with this year, but somehow it found itself this year. So we have to take it out. Okay, we're taking it out, and I get 9,000 here. And I'm done with my expenses. So to get my operating expenses statement, what I have to add all these expenses, including the sundry expense that has been highlighted here. So you're welcome to pause the video and calculate on your side. Okay, in my calculation, I am getting, let me see, I think it's 756,900. So this is what I am getting on my side. Okay, which means that we're done there. So let's see. Okay, I forgot that we also have to work out our gross operating income. So gross operating income is pretty much straightforward. So since we have gross profit there at the top and we have operating income, so all you do is add gross profit with other operating income, you should be able to get gross operating income. So if I add those two together, I get 1,933,000. Okay, which means that now to get my operating income, obviously I say this gross operating income minus the operating expenses. You pause the video and you calculate. I get 1,176,100. Okay, so now I'm in a position to do what? To calculate interest income. Okay, let's figure out what they're saying about interest income. Okay, highlight this. You see, like, consistency is very important. Don't do something and then suddenly you just leave it hanging. So they're telling us here, they're just telling us that interest on fixed deposit has not been recorded yet. So interest on fixed deposit should have been recorded, but it has not been recorded, which means that I have to record it. Okay, so there isn't much information apart from what here, the statement. So I can now miss what they're saying. Fixed deposit Ghana's Bank at 8% per annum. So I'm just going to say 370,000 times 8%. Okay, 370,000. I always say don't just say times 8% because learners forget all the time to include what in the calculators, even the percentage sign on the calculator, not just 8. And then suddenly they have weird looking numbers with so many zeros and end up being wrong. Whereas the intention and the understanding was in the right place, but calculators just let you down. So let's say just say divided by 100 to make it, yeah, and then you put it like that in your calculator. You won't get other extra zeros. Okay. In the meantime, I am getting 29,600. Okay. So the 29,600 will be added with the operating income. Okay, which gives us the profit before interest expense. So profit before interest expense, you add those two together, I get 1,205,700. So this is what I'm getting here, which means that then we can now calculate our interest expense. Okay. So the interest expense here, then we will just, let's see if there's extra information given for us, or we have to calculate. Okay, this interest expense here, I can see. Let me highlight it, 11,500. Let's see if there's additional information. 11,500, 11,000. Okay, there isn't any. Ooh, I think we miss one information there at the top. Okay, let me see. Yeah, we missed one information there at the top, but don't worry. The statement is still correct. I just forgot to add it. Okay, insert. Oh, okay, I don't know how to do this. Let me see. Okay, yeah, that's just that thing that I just need to add there, which is depreciation. Stress about it. I'm just looking for a way to add it here. Perfect, found it. Frustrating. The sign is just too tiny. Oops, sorry. Okay, I'm gonna leave it like that. Just know that this depreciation 25,000. It doesn't like affect the answers. I'm sure maybe you did calculate there and you are wondering why did I get 756,900 and you're not getting that? Yeah, it's not because there is depreciation that should be considered, but I left it out by mistake. Yeah, it's just that. So I'm just going to continue because of time. This is not working. The more I try to add the column, the more it's just does its own thing. So then we say 11,500 interest expense here. And then the 11,000, there wasn't any calculations. So all you do is just say profit before interest expense minus interest expense. And then you should be able to get 1,194,200. Okay. So that's all. The confusion is probably the interest, what is it, the depreciation that I've mentioned already. Okay, I want to try again because I want to save the time. yeah, the plus sign is there, but yeah, we are done with the question. Yeah, if you have questions, just reach out. Otherwise, that's it from me. Thank you so much.